on the gold line, but that's not been anything impressive over its history, other than the respect of the 200-week moving average, right? So you can put some respect on that just because of it. But remember this phrase, okay? I coined this. I made this phrase. The only technical or indicator that matters on the chart is the one that has proven itself. Okay, there's hundreds of them, and there's not a one-all be-all. They all serve a purpose, and sometimes they work. The ones that work are the ones that prove themselves on that specific chart. So, in my opinion, the one factor that proved the bull trend for all those years was the blue line. Look how beautiful that was. Since 1990, if you bought at the blue line, which you only got a try like every decade, bro. Every decade. 1990, 2002, 2016. That was a 14-year gap before it touched that one. But every single time it touched it, did it not do exactly what you needed it to do? 1,000% rally. Touched it here, 2,600% rally. Touched it here, 860% rally. Look what it did. We're talking a 36-year bull trend has changed directions. I would go buy Lululemon or Nike. You gotta put some respect on it, bro. 36-year bull trend changed. Fuck that name. Oh, got the sell off. Anyone take those puts with me? The two things that if I was to teach anyone, I don't want to teach all y'all my shit because then you guys don't need me. But the things that matter the most is the only trend or the only technical or indicator that matters is the one that's previously proven itself on that specific chart. That is a God statement in trading. Okay. And then when I know you don't want it to be, Elon Musk has a famous quote. God, I'm going to butcher it. Let me Google it. I don't even want to butcher. I don't want to disrespect that man like that. Damn it. Sorry, guys. I didn't sleep last night. I've been up for like 35 fucking hours. My brain's fried. I have no like recall. I can't even think of the damn phrase. I can't even think of the name I wanted to call you earlier either. All right. Quick pulse check. Getting that little bit of rejection. Let's see what those puts are doing. Hmm, 10%. Oh, there we go. There's the drop. 16%. Okay. I will say, guys, let me refer to this because this is important. VIX is on high watch, on high watch in the month of July. All of you guys should keep this up. I don't know what is up with that, but anyways, there we go. Have it on high watch because this resulted in a big crash, and then you have this ascending support. Oh, U.S. oil. Let's look at U.S. oil. Let me do this update, guys. Sorry. Oh yeah, there you go. Look pretty for me. Oh yeah. Mm-hmm. Buy oil, guys. Intraday trade right now, and that's a counter trade to the market. Telling you right now, it's easy money. That's easy 10%. Buy a single option. Buy a $500 option. Buy it for September. Any more questions, guys? You want me to go over Bitcoin, Ethereum? I'm gonna laugh. I have a feeling. Let's see what SPY is. I have a feeling SPY goes green, and QQQ closes like around that negative 0.8 to negative 1% range. Easy money to be made there, guys. And it's a good counter trade too. Algo or XLM. Okay, I got you. Thomas, I did SoFi on my wall. If you want to take a look at that. I flawlessly called this. I don't even know if you saw that, but make sure you guys read my quoted posts anytime I quote them because there's information there that's valuable, right? So like if you look at this, so on October 8th, 2025, I posted SoFi and I had a breakdown and I said 5-wave structure, it breached the all-time highs. The risk is to the downside. It's just you got to realize that once it breaks that, you have the breakout traders. Like they got to trap some people. So the risk was to the downside, especially like a look above and fell, and then entering the seasonality. And sure enough, that high was like $28. Then you look at the update, and I was right. The upside potential was 14%. Do you know what the downside was? Negative 53%. You always got to think in risk to reward, right? It's like, oh, it's going to breach all-time highs. Okay, well, you don't know how high it can go with all-time highs, and we're talking SoFi. right? Fucking lending company. That no, I don't even know anybody that uses them. It's an idea. It's a retail name. It's got an attractive name, so they're going to use it and pump it. So I called the top back then, and then you can see that there was a distribution phase for about 2 months. And then when they sold enough shares at the top, you see what happened next. Multiple weeks of just red, 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 all the way to negative 53%. Now, at a 5-wave structure, the most ideal place for a reversal and a bottom is the 61% retracement. You're looking at it. It's basing off that 61% retracement, right? At the $15 level. $15 level is also psychology, psych level. $15 is also the multi-day demand zone that I have highlighted in the purple. The 61% retracement is also the blue line that you can see had been the bull trend since 2024. So it is trying the very least to find a base here. I would be a little worried. Once again, it's not, it's like, guys, I can't express it enough. The biggest problem with most people is they're in too many names. Like I think it's a very safe bet to say that this touches that 38% fib at $21 a share. But dude, you have Tesla, you have Nike, you have Lululemon, you have MSTR that is a generational bottom if Bitcoin's not dying, and Bitcoin's not dying, at least not on fucking Trump's watch. You know, Bitcoin is at a generational low. Like you have all these names, and you're going to waste your time in SoFi. There's not even a theme behind it. That's my thought process. Trade it, sure, go for it. I wouldn't put a huge amount in it. You know, I tell everyone around me in real life, you only need one retirement name, and that's Tesla. I would cash out your fucking 401k and I'd put every fucking dollar in it. And with a 5-year outlook, you'll be able to retire yourself in less than 10 years, no matter your age, right? If you put a lot of money into it, especially if it's a Roth and you can do options. But yeah, needless to say, I called the SoFi top flawlessly. I think this is a bottom, at the very least, a counter trend rally bottom. Could be to new highs. It should be to new highs since it's a 61% retracement into a 5-way structure. But you know, it just it looks a lot cleaner when it's something like Nike or Lulu, in my opinion, because I'm not just looking at chart structure, right? Like my bet right here is off the fibs, the 5-wave structure, and a little bit of demand. But this market cap is so small that this could easily be manipulated by one company, right? With my analysis with Nike and Lululemon, we're talking monthly chart indicators, which is a big difference between weekly and daily. It's a lot more effective and a higher probability of a successful outcome. I got to figure, okay, Algo, Azure. Okay, I did the SoFi. I can do Algo. I posted Algo too. Let's look. I think I did. Algo? Maybe I didn't. No, actually, no. I'm confused on what that damn name is. Interesting. Ooh. You bitch asshole. Okay. Strategy's not doing anything though. Tesla's not doing anything. See, this is a weak pump. I don't like that. Bitcoin, look at Bitcoin. That's nice. But I think this is a bait. I think this is a bait to make everyone bullish because they're going to take it the market even lower. Otherwise, they pump. Right, here's a nice entry on NEO with this back test, guys. Telling you, take a look at that NEO. I mean, obviously you don't want to put a lot into it because it doesn't have a really successful history of playing out. Okay, I'll talk about Bitcoin in a second. I think MSTR's bottom is in. I also am calling for Bitcoin's bottom to be in. but I think MSTR's bottom is in. I mean, you can literally see everything in crypto is going red, and it's literally staying green. Last week, it literally was green in a sea of negative 10% red crypto names. Like when they are positioned, they are positioned. You got to remember that. Anyways, Algo. Let's see this name. Is this? Is it Algo the crypto name? Are you talking Algo the crypto name? I'm just going to do XLM. I don't like that idea. What is this? Am I looking at the right shit? Are these crypto names? Bruh, you have me look at like trash stuff. Do better. Ant fam. Get out of both of those. Quit this trying to get rich quick scheme. Delete both of those from your watch list. Don't look at them again. Save yourself time, bro. Just learn how to trade effectively and be patient and trade names that don't fucking die as soon as the market gets questionable. All right. Let me make this very simple for you guys. Everyone pay attention. This is for Bitcoin. This is for crypto. This is a multi-part series. I'm going to say a lot. First and foremost, if you don't know my level of accuracy in Bitcoin, I've practically called every major pivot since 2022. If you doubt that, search my history. I make it well known. I do a lot of content where I literally show my proof of concept because that's how you get followers when you're a small account. Okay. There's the X community is quite divided with everyone deciding where Bitcoin goes. There's a very large amount of large accounts who believe we go up from here, and there's a very large amount of there's a large group of accounts with large. What the fuck am I saying, bro? Anyways, there's a bunch of accounts who have a large following both ways that they're pretty even. A lot of people think it's going up from here. Some people think it's going down from here. Like I think Cyclops is like a massive account. It's like 800,000 followers. He thinks we're going down. Let me put it in perspective for you. Okay. One is without a doubt, Bitcoin is not going under 40K if Bitcoin is to succeed. Remember the second half of that. If Bitcoin is to succeed, it is not going under 40K. Under 40K, it's a failed asset. The level of wealth destruction will be far too great. No one will ever trust it again. Just make it simple. It's not going under 40K if it's to succeed. If it goes under 40K, it never sees an all-time high again. Okay, now that that's been said, even if we are to go lower, the stress, the confusion, the distraction of trying to time the bottom at a perfect level is too much. You know, if your goal is to get rich, you need to have a strategy of when to buy and then spend the rest of your time trying to make as much money as you can in other ways and then just keep buying, right? Rather than you just wanting to buy the bottom, and then when you go to buy the bottom, you're scared to put all the money in that you have because you don't know if it's the bottom, and then you just end up missing. And then from where you bought in too early or something like that, then you're down and you're emotional and you trade it wrong and you don't wait. There's just so many things that play into effect. So let me make it simple for you. I posted 2 pieces of content on X, and you can check both of these to refer them. One is if you historically bought Bitcoin in the middle of June, if you started DCAing Bitcoin in the middle of June of every single year, guys, every single year, historically, you have like an 80% win rate since the creation of Bitcoin. So if you just, in the middle of June, started buying every week, you are at a cost basis on the lower end of where the price range goes into the end of the year, and you make money. Okay, that's one. We're just talking June, every single year, DCA. Now, if you look at this chart, this is quite simple. We're on the weekly chart, and this is the 200-week moving average. Since the beginning of crypto and Bitcoin, anytime we've broken below the gold line, and if you DCA'd and started buying every day and every week, your cost basis would be extremely close to the absolute bottom. If a name is going up 200 to 300%, it doesn't matter if you're 20% away from the bottom, guys. What matters is you got as much money in there as possible, and you did it with a level, clear thinking head. Okay? If you started DCAing in 2015, you barely had any weeks to do it. And then it had a generational bull run. In 2019, it barely tapped it, right? Spent barely any time here, a couple weeks. And then we had another generational bull run. Then we had COVID crash, broke below it for a measly 2 weeks. People were scared. During COVID, they were scared. The world's ending. There's a virus that's killing everyone. I'm scared. Maybe it goes lower. I won't buy. And then all of a sudden it goes and reclaims it, and then you missed out on your buying opportunity because you didn't have a plan. Right? What happened next? Generational bull run. What happened in 2022? Oh, this is what everyone's talking about. Oh, it went way lower than the 200-week moving average, and it did it for multiple months. Okay, sure, it did for 6 months, but imagine this. Imagine how much little money you were able to make in these opportunities because it didn't spend enough time under there. This one was the time that you could have went for 6 months and put all your savings in there, and this would have been the retirement trade because you had enough time to get enough in. Right? All these other ones, you had weeks in fast decision making. This one, you had 6 months to get in as much as possible. And then you had this rally, right? What was that rally for? 685%. You know, 685%, that's a lot of money. It's a lot of money to be made. So keep it simple. When you are under the gold line, you buy. You don't think. You rationalize. You put in like 15, 20 to 30% up front, and then you DCA daily or weekly. We broke below it. We're immediately attempting to reclaim it. You've had a month of DCAing. Probably the majority of you guys didn't DCA, but you've had a month of opportunity to DCA under the gold line, which is around 61K. Okay? That's what I would do, right? There is this Head and Shoulders. This is very fearful. There's a Head and Shoulders that was over here. The odds of this playing out, for this to play out, it will take a centennial event. It will take an economic event. So just watch the economy. If a curveball comes, then you know what's most likely going to happen. I don't think this is going to happen. If this is happening, America's going to be in rough shape. And realistically, we have Trump and we have somebody who likes to print money. So as long as we don't have stagflation, I think we're good. But ideally, I would be DCAing. Okay, so that's a clear, level-headed strategy on what you should be doing if you are a fan of crypto. If you want to invest in crypto, right? You should be buying now. I'm not saying put it all in at once. DCA is always the best strategy because if it goes lower, it goes lower. Okay? At least you have money to keep adding. If you are a fan of crypto, if you believe in crypto, if you believe in Bitcoin, under 61K is a DCA's dream. Okay? So that's that. That's as far as buying Bitcoin. Now let's talk about psychology and why I think it's possible. We've bottomed already. So my thesis, I call the top of Bitcoin in October, November. Posted all about it, warned about it even in September. And my thesis, even back then, was a bottom between June and September of this year. We are in July. We are in that bottoming range of time frame for my thesis. Okay. My thesis has also been 45K to 60K. We broke into that range. All right. Now, my base case was around 52K. We could see 52K, but I think there's a level of psychology here that people aren't really taking into consideration, and it's a big deal. And it is the prediction market. The prediction market is growing rapidly, and it's already a multi-$100 billion business. So there's a lot of money to be made on that market. Well, the thing is, if it is a prediction based on a stock movement that Wall Street can control, they can play both sides. So you have to think about this psychologically, right? There's a lot of debate about how low Bitcoin's going to go. What's not up for debate at this point is everyone believes that it's following the four-year cycle. Everyone believes it's following the 4-year cycle, which means everyone thinks it's going to bottom in the next couple months by the end of the year. Okay, if everyone thinks that, if Wall Street lets all the retail get in, then who are they going to sell to? They can't have that. They need you to chase. They need to cause uncertainty. They need you to not buy. Then they need to move it up, and they need you to sell, or you to buy, and then them sell it to you. Because if they just let every fucking retail buy in, who the fuck is going to buy their shares? Right? So, with that being said, the longer they wait, the more retail is going to stack in to Bitcoin, and it's going to be a crowded trade. And the crowded trade never wins, ever. Right? So, the more probable outcome is it be sooner, not later. Because there's a lot of famous accounts saying, oh, like I think even that Cyclops guy is like, all you have to do is just wait till October and then buy. Well, if you wait till October and it's already at 90K, what do you do then? That's the more ideal outcome. There's also a 70% bet that Bitcoin hits 50K before 100K on Kalshi, the prediction market. So if there's 70% of people are betting on it hitting 50K first, the counter trade to that is a lot of money. So why wouldn't Wall Street make money on the prediction market by it not getting to 50K and then rallying it early, not allowing retail to get in early, and then they chase? I think the most profitable trade is for them to rally it early, not let retail get in fast enough, and then manipulate the prediction market because they can manipulate Bitcoin. I think that's the most profitable trade for Wall Street. I think that's what's going to happen. I think that's what is happening. Now, given if the economy goes to shit or something like that, we can sweep that low. And if we sweep that low, it's okay. But I made a post that I think it's very, very possible that 57,700 was the bottom. And so far, it's acting to be so. We'll know within the next 45 days because it'll have to sweep that low within 45 days. But even if we go lower, it's not a big deal. Keep DCAing. But I would have a lump sum into your names that you believe in, because if this is the bottom, then we're going to start accelerating quickly because they don't want you to get in. And just like a Tesla trade, I don't know if you guys follow Tesla or if you know the Tesla personality, but they will keep that thing compressed until they're ready to rally, and then they will move that bitch 80% within 40 days, and they won't let it pull back until the trade is done. They'll rally it for 80% in 40 days, and then the trade's done, and they'll literally sell it into you all the way back down. All right, so that's that. Now, I showed you the gold line. Now let me show you the purple line of why my original thesis was around 52K. You can see that it acted as the band. If you have both these on here and you treated it as a band, it always went between both these price points. In 2022, it hit the purple line. The purple line is around 51K. It's also the bottom of the Head and Shoulders. So my base case was this purple line to get hit this year. That actually was my base case. I'm starting to have a change in thesis just because of the prediction market. And so many people are anticipating it going lower. I could be wrong. It could go lower, but I don't even consider that being wrong. My range is 45 to 60K, and I think you should buy in between it and DCA if you are a believer in Bitcoin. All right. So your question is, would you buy Ethereum or Bitcoin? Well, last cycle, it taught you a lesson that not everything has to rally. Bitcoin made multiple all-time highs. Ethereum did not. I would say I would buy MSTR before I'd buy Ethereum. It's probable that Ethereum still rallies really hard. I made a post. You can review the analysis, but I think it bottomed too. Let's see what we got here. Yeah, I think it bottomed too, but once again, it was punishing being in the wrong trade all that time for the people that was obsessed with Ethereum, But to keep it simple, quick analysis for Ethereum is it's the 2-week chart. You can see at the 2-week chart and the 37 RSI. Watch this, guys. This is very, very valuable stuff. The 2-week RSI on Ethereum is the God indicator, in my opinion. What this has shown is a weekly close at the 37 level and a V-shaped reversal look with a candle close, creating that V look has presented the bottom of every bear market since the beginning of Bitcoin or of Ethereum. So let's backtest this. So in 2018, you have the breach of 37. You have the V reversal with the green weekly candles, and this marked the bottom of the 2018 bear market. What did it do? It rallied 355% in 200 days, had a wave 2 correction, and then rallied 5,000%. In 2022, it breached the 37 low, gave you the V reversal look, and rallied for 138% in less than 80 days, and eventually rallied 490% after a wave 2 correction. In 2025, it breached the 37, gave us the V reversal, and then rallied 255% in 140 days. We are there again. And then Sunday night, the 2-week candle closed on July 5th, giving us the V reversal look as every single one of these times. You guys see that. Pay attention to that. It gave us the V reversal that marked the bottom of every bear market since the beginning, since the creation of Ethereum. Now, let's add a little bit more. Let me show you one more thing, guys. This is also at the ascending support since COVID lows. We're talking 6-year ascending support since the COVID low. Guys, pay attention to that, okay? 6-year ascending support, COVID low. All throughout 2020, it rode it from March to December, which is like, 9 months? And then we went to the parabolic rally. 2022 bear market, tapped it, right? Tapped it, bull market. Bottom and then bull market. 2025, tapped it, bottom, bull market. We've been basing there for multiple weeks. We have a bullish reversal candle. We have 3 bullish candles. 1 bottom wick capitulation candle, right? Look at this. The highest volume bar in the area, marked every single bottom. There's always one before. If you guys look at this, right? The absolute bottom, it was the capitulation candle before it had the highest volume. The highest, the absolute low, the capitulation volume candle right before it. Highest bottom, this one actually wasn't, but that's fair enough. And then this bottom had the capitulation candle. With this analysis that I just gave you guys, this is my bias of why I think crypto has bottomed. Ethereum is telling us, based on history, with 100% accuracy, that Ethereum has bottomed for 2026. And if this is to play out, by the end of the year, we see 100% plus move in Ethereum. By the end of this year, I think we bottomed. I'll leave it up to you. Tesla. Tesla is one of those things that you just keep DCAing. In my opinion, Tesla should be the largest account position in every single person's account ever. You don't bet against the mind of Elon Musk. The man owns $8 billion companies. He is the world's first trillionaire. He has a photographic memory, guys. And not only does he have a photographic memory, he is good at physics and engineering, and he has common sense. That is amazing. Most people that have photographic memories are fucking retards and have no common sense. So it's like, if you're not a trader, if you make Tesla your largest position, you just wait for the next cycle. If it takes 5 years, it takes 5 years. Who cares if it takes 5 years if you're fucking retired at 30 or 40? You want it to take 5 years because if you only have a measly 25K in the damn name, how do you expect to retire? You need to put 5 years of savings into that name. You need to put 3 years of savings into that name. That's how you retire. Like, I don't get this, the impatience of some people, right? Like, if you believe in a name and you believe in the outcome of the name or the company, like, no, I don't think anyone doubts where Tesla's heading. It's just the timing. It's like, oh, do I want to miss out on opportunity for 4 years? It's not missed opportunity if you literally are able to get $250,000, $300,000 into the name, and then it rallies 2,000%. Then you got 2 mil plus. You know what I mean? With that being said, the purple line is the God trend. If it goes to 260, I would buy it with everything. I would go to the bank. I would refinance my house. I'd pull up the equity in my home and I would go get a fucking line of credit. And I would buy it. I did it here and I made 400K from 25K. If it goes to this 260 area, I would not only use all my funds, I would literally borrow as much money from the bank as possible because fuck them and I'll take their money and make it. All right, guys, moment of truth. Moment of truth. SPY is attempting to break above the 749. Look at that. You saw resistance. You see it break above. Look at this little back test support. Put some respect on that name. Ooh, that's why. Okay. Okay. You guys see that, right? It's the 5-minute purple line that it wants. It's pursuing. It's trying to bleed up above it. That's going to get walked down. Let's go ahead and get that on the board real quick. Oh, there you go. That's already broke through and back tested it. Sorry, guys, I'm going to add one more lotto just in case. Okay. Bitcoin is literally green after, what was it, -3%? My level's holding nice and true. 2%. You guys see that? 1, 2, 3, 4, 5, 6, 7. 7 green candles after the 3 white soldiers. Gotta do an update, guys. Sorry, give me a moment. By the way, when we rally, I think this is what we rally to. You guys see the descending resistance? 70K-ish? That'll be the first stop. We need to look at the 10 and 30 year in the dollar. I haven't looked at that actually in like over a week. So let me do that when I finish doing this really quick, guys. Don't forget how many fucking counts this was. 1, 2, 3, 4, 5, 6, 7. There we are. See that breakdown back test, guys? Pay attention. Oh, I got greedy there, guys. I just sized up on my short. I should not have done that. Intraday trading, you don't do it as a day trader. God, I gotta stop doing that. That's my biggest mistake with my ADHD ass. There goes bottom wicking. Okay, what are we doing? If you have time, yeah, I got time, man. I'm literally just hanging out with you guys. Just don't give me fucking microcap names. Do you say into Amazon? Okay, I'll do Amazon and EL. Oh, give me a second, boys. I gotta let me do this micro trade really quick. Pay for my dinner tonight. Moment of truth, guys. You see it trying to respect that purple line? Ooh, that's looking like 5 waves. Oof, they all are. Interesting. Oh, that's the 23. 23 and me. No, go to 747, please. 747, please. Pretty please. Okay. Let's check. Still really bad market breadth, guys. I'm not sold on this rally. I think we got lower in this week. Just gonna withhold that. Okay. Amazonian. All right, guys. So make sure you always, when you have these names, because I regularly update the names. So there's like 20 names I'll do an update on, and I will literally quote the previous analysis and update every week. So you can literally thumb through an entire analysis of a specific name like Amazon, because I've been doing Amazon, and just see my point of view throughout the last 2 weeks, because that's when I just came back from X. But essentially, let's go top down. Okay, this is, so I don't like the monthly candle being reddish right now, but that's also for July. So if we rally strongly, then that could be saved. The MACD on the weekly is also red. That's not favorable. Forgot to turn these babies on. Historically, though, you can see this area has marked the bottom of Amazon many a times, as long as a deeper correction is not happening. You know, sometimes it can do it, but as soon as you get down here, once we get that V-shaped reversal, which it got last week, once it creates a V below this level, it's marked bottoms every single time. So that's a very bullish look, in my opinion. That says a lot. Now, given you have the deeper retracements in 2025, and then this one that caused some mayhem, but ultimately, they found support at key levels. So that's the weekly. With RSI, I don't see anything. Okay, right here. So there's a couple of times that the daily MACD, the crossover at this level, the support level, has been favorable, but it's not consistent. So you guys that have been here for the last hour, you guys have seen me use this as an example or as an indicator of trade, of value on 2 other charts. I don't find value here because it's not consistent. Out of the last 6 times, this was a tradable bottom, but it ultimately went lower. Tradable bottom. This one was a fake out, so that one was bad. That one was a major bottom. This one was a fake out. This one was a fake out. It eventually went higher, but so that could. Now let's go to the chart, and the chart's just ugly as fuck. It's been sideways since 2024 essentially, like barely making higher highs, higher lows. So historically, all right, this is what I see. Historically, you got the gold and purple band, which since 2024 has acted which has acted as support, except the major corrections, right? So between the gold and purple, if you bought, next rally. If you bought, it made a lower low, which, I mean, you can have an eject button too, right? So for example, if when you bought this, if once it broke under this, you should have just sold. If you sold, then you could have gotten the next leg down. Broke above it, back tested it, rallied. Supported, 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 broke below it. Once it got under the purple, you just eject button, sell it, right? Then once it started basing, you could have been like, okay, now I'll try to re-enter, especially with this inverse head and shoulders. You see that beautiful inverse head and shoulders? Man, that's sexy. Oh, that one, that was a head and shoulders too. Inverse head and shoulders. Anyways, rallied, broke below it, and now you have this support. So if you would have known this and had this measured on your chart, you could have known to buy this down here. And if you would have known that to buy this down here, then you would already be up pretty significantly. But that's the idea. You know, it's like, here's your eject button. Do you want to buy? Go for it. 224 is your eject button. Start printing price under 224, you sell it, you close it. Don't get greedy. Make it simple. No emotions. You don't need emotions. You have chart history to tell you exactly what happens next. On that note, you also accept and acknowledge that there's an inverse head and shoulders building out. So if the market goes bullish, I think Amazon is going to assist in pushing that narrative. I think it might help carry that narrative. On the upside, I talked about it hitting this supply zone. We got a hard rejection, but given the green daily candle closes, I think we're going to grind higher into this next supply zone of 252 to 257. I think that's coming. It's going to come. Just a matter of time. So just give it a moment, let it play out. That'll happen. If it can clear this 256, this is going to be a big deal. This is when things get really bullish as it gets back above the majority of shares traded for the last few months, right? If you can get, especially just above 250, to be honest, if you look at this, just look left. If you get above 250, you're above the majority of the shares traded over the last 6 years. Very little shares have been traded above 250. Realistically, the only time it got above 250 was a look above and fell. Looked above it, said, nah, sold off. So this is a big line in the sand. This means it's very possible it could even be rejected here because you can see rejection here, rejection here, rejection here, rejection here, rejection here, got initial rejection here. So just be mindful until we get above this, there's risk of a sell-off. So just be mindful of that, to be honest. That's new information as I said it and as I saw it. 250 is a line in the sand. So you got to be mindful of that. And then realistically, you need to really be mindful of this. If you know Elliott wave theory, this is the scary part. That looks like 5 waves. If that's 5 waves, you're looking at a 50% retracement. If you're looking at 50% retracement, you're looking at 251. The most probable outcome is for a rejection here. And if that is a rejection, you're looking at a nasty sell-off for a wave 3. Or a wave C if it's 2 5-wave structures for an ABC. So in my opinion, after doing this all in front of you right now, I'm bearish below 256. I'm extremely bearish below 256. Extremely bearish. So the closer you get to that, your risk to reward is to the downside. And not only a little bit of a downside. If that's a wave 2 and this turns into wave 3, that's a nasty sell-off coming. Maybe one that looks like this. And you saw what happened to this one. What kind of drop is that? 20%. I think that next one would be worse. If that's a wave 3, it'll be worse. So on Amazon, you got it. Whoever bought this got a nice little rally out of themselves. I'm extremely bearish below 256. Your buy zone is this double block, order block right here. This demand zone right here. You can buy here. If it breaks below the purple line, you sell. You know, down here, you're close enough to this as a stop loss. Your risk to reward is much better down here than up here. Up here, you're near a probable top. And that's my analysis on Amazon. SPY is chopping sideways, destroying my little lottos. Tesla's trying to base. What else we got here? Alibaba is trying to do a little something, something. That Neo, man, I might take a little ad. Nah. Oh, wait. MicroStrategy. That looks like a Head and Shoulders developing. I think we might retest some of this low over here because it ate that demand from me yesterday or 2 days ago. Yeah, that fair value gap I feel like could be assaulted in the low 90s. If that happens, I think that's the bottom for the month. I think we go sayonara. Okay. I got EL and Kava. I just did a full analysis on NVIDIA. I do have to tell you, AntFam, I don't read earnings. I don't give a fuck about finance, like the earnings part of it. If I understand the idea, that's all I need. Like I'm really good at understanding psychology, how money moves, how people act, how people work, and then I'm really good at charting. The finance stuff, like it's these days, it doesn't even fucking matter half the time. I mean, you see it all the time with these shit companies rallying 500,000, 2,000%. As far as NVIDIA, though, I'll give you a quick fundamental perspective. NVIDIA's success has been derived entirely on being the foundation of AI growth. It's not AI itself, it's the foundation of AI growth. So, what that means is, as long as people are advancing towards AI and need and want to invest in the growth of AI, they are the foundation, they are the base. So as long as that happens, their sales increase. You got to realize though, it's up 4,000 fucking percent, something crazy from its. Actually, let's do that. I want to compare the historic NVIDIA rally run versus the Tesla run. Let's do that. $2,200%. If fate loves irony, let's see. No. Yeah, no. Tesla said, hold my beer. What's this? All right, 4,000%. Serenity, one of these are 2,000. No, no. Tesla just straight up said, hold my beer. Said, nah, bruh. You have to watch the earnings and you have to watch like the decrease in acceleration because they're going to beat earnings for quite some time, but it's about that margin of beat, like as it starts to decrease. But I've never been the type of guy to. I mean, dude, my name's the bottom sniper. I don't buy things at the top. And once again, over the next 5 years, Tesla. Always going to be Tesla. It should be the largest position and everyone's holding for the fucking obvious reasons. The only way that doesn't play out is if he gets murdered. Boy, y'all love these names. The fuck is this? No monthly time frame bullishness there. Let me see if my secret indicators got any clues for me. Nope. Nope. All right, man. As far as ill, I'm not impressed. That looks like an ABC, if I had to be honest. This probably is a little bit deeper than a 61%. It was a 78%. It's been dissected for how long? Is there any change in the? Yeah, I mean, the easy money to be made was this double monthly RSI bottom. This one was your easy money to be made, right? Like this gave you 152%. Now you're playing with fire. Okay, so the bottom to have had was this one in April of this year or last year. You know, that was your trade. That was the monthly cut it under 30. If we break under 30, I'm getting out. Which it could be very rude. It could be a rude boy and just do one of those, where it just retests this low, sweeps the low, says fuck you, and then rallies. I wouldn't be above it. You have to be very careful with these smaller cap names because they can be controlled by one Jane Street. One hedge fund or institutional Wall Street can manipulate prices like this. The bigger names, you can't. I may have been too bold with my purple line, guys. Right now, it's finding resistance at that descending resistance. You see that? So those are the ones that are on my radar for this month. Tesla also historically rallies really hard. I think this dip gets bought in Tesla. My buy alert is under 387. We're messing around right above it. You can see this demand zone, 2 days. This is the third day of it trying to find support. But if the indexes sweep the low a day, then we could see a drop. If we sell off here, I mean, this is nasty. Look at this. 438. I called this top too. And I called this top. I called both these tops. Both of them are nasty. The measured move, if this is ABC, says 368-ish. Another bottom here. You got to put some respect on this since April 2026. As long as we are above that 364 level, it should find support. In the middle of this, which is where I'm looking to buy, can be an inverse head and shoulders. But historically, Tesla has rallied every single July for the last 4 years. So until that trend changes, I'm bullish in July on the back end for Tesla. Now, could they have front run it? Because that's July 2nd with, what is that, probably a 20% rally? 19% rally? They could have front ran it. That could be nasty. But until the trend changes, my buy stays the same. What am I doing, boys? Well, that's a reversal candle. Probably backtest this little mini demand on the 5-minute. Let me go ahead and sell half my contracts. I'm close enough. There's no point in being greedy. $233%. I'll take it. I'm actually going to go ahead and let's see, because they're probably close to fucking zero anyways. 741s are 15 pennies, guys. It's a little early, so I'm going to just buy 5. And let's play a game. What would that be if it went to 738 or 739? $1,100, like 1,500%. So more than enough to pay for the weekend. All right, so Ethereum. This is why I have a bias that I think it's very possible the bottom is in. Remember, the only indicator that matters is the one that's proven itself. So, only 2-week chart of Ethereum. We're looking at 3 things, right? The first one being the 2-week RSI. On the 2-week RSI, anytime we've broken or hit 37, we hit 37 and then it closes and then we get a V reversal look with a candle follow-up close. It's marked the bottom of every bull market since the beginning of Ethereum, guys. The beginning with 100% win rate. It has not failed. All right. So on July 5th, last Sunday, we got a bullish candle close, reversal, and it gave us the V look. All right. If we go all the way back to the beginning of Ethereum, anytime we hit 37, we reversed and we got a V close candle. It marked the bottom, in which this one gave a 358% rally, a wave 2, and then a parabolic rise. Okay. In 2022, we hit under the 37, got the V reversal. It rallied for 124% in the short term, and then a parabolic rise after the wave 2 for a 356% rally. In 2025, we closed at the 37, got the V reversal confirmation, in which it rallied 261% in 140 days. Again, we are here, right? We are here, and we got the V confirmation. So now I'm looking for a continuation. If this stands true, we should see Ethereum double from these lows by the end of the year. I also think that Ethereum closes the week green Sunday, which means above 1785. Because I don't think that this closes like this. I think it closes further up. So that's the 2-week RSI. Then you can look at the MACD on the 2-week. And the last time it hit this level and curled, it marked the bottom. This was on December 19th to January, pretty much December to January, like January 2nd. Let's just say that. January 2nd. What happened on January 2nd? Bottom was in, rallied. Okay, so now you have 2 points of confluence confirming this bottom. There we go, getting that rejection that I mentioned, guys, on the SPY. And then on top of that, on the chart, we have 6-year ascending support from the COVID low. All through 2020, it found support for months, all the way to the end of the year. From March to the end of the year, it found support every single time on this ascending support, then went and had its parabolic rise. In 2022, it hit its bottom. It found support at that line, rallied. In 2025, found support, rallied. Where are we at? That support. We have multiple weekly candle closes. We have 2 bullish ones, and we start to have structure at this base for a parabolic rise. So that's what I think happens. Given this, I'm very bullish on Ethereum. I think the low is in. If the low is not in, that would be concerning. But my bias, based on the 2-week time frame and multiple indicators and a 6-year ascending support, is Ethereum's bottom is in. If Ethereum's bottom is in, it's safe to say I think Bitcoin's bottom is in, which is what I've called for. Once again, though, refer to my Bitcoin post. It's a DCA between 45 to 60K. I could be wrong, but that doesn't mean it's a losing trade. It's all about how you position. I bought under the gold line of Bitcoin of 60K, and right now I'm green. Could it go lower? Yes, but I didn't go all in on Bitcoin. I'll let it. I'm happy for it to go lower if it can. I'll wait for the more confirmation, additional confluence to prove that the bottom is in, and then I'll go heavy. But right now I have other important trades. Right, I have Nike, Lululemon, Bob, and MSTR. So I have money. There's money to be made right now while Bitcoin and Ethereum figures it out. Could have went heavy on those puts, guys. They're up 40%. So, in my opinion, the bottom is in. I called this head and shoulders pattern to play out in the 130s. Crash and burned. You can literally look from 2025 that I had 65 as my buy level. Did we hit that level? Yes, we did. Descending resistance, my main buy level that I've had for a long time. Monthly demand zone. So descending resistance support is 1. Monthly demand zone 2. My overall just resistance line or support line at 65 3. And that's just on the chart. That's not including the other indicators, which I think it's the weekly. Mark the bottom here around 30 and mark the bottom here. Same thing with this low. Did it go a little bit lower? It could, but I don't think so. My indicator on the monthly. Look at this, guys. My indicator on the monthly identified the top. Will it indicate the bottom? Has a fair chance right here. Oh, I don't know what that was. Has a fair chance right there. If not, the next bottom on the ADL on the monthly would be down there. But I think it's possible we find this bottom here. All right, guys. On SPY, I said that we would hit this little level here and get a response out of it. So far we have. It's going to attempt this zone. I can get increasingly bearish under 744. Under 744, it's possible the top is in for the day. We'll see. But right now, the current trend for the day is the gold line resistance, SR flip. Will it SR flip? That's what we're looking for. Litecoin. You can see since 2019, has it been a buy in this zone? Every single time. This one rallied, this one rallied, this one rallied. So until the trend changes, what's history say? Up. Up. You got to realize though, it didn't come quick. Only this one came quick. So you can look for a trend change, right? You can go and zoom in on the smaller time frames and find a descending resistance for it to break out. There you go. Right? So even though I'm bullish and it's in the buy zone, let it break out. Let it give some extra confluence. I told you guys yesterday, U.S. oil. Its time has come. I think we're going to see higher. Doesn't mean supply can't hit, which is what's happening right here. What's the supply? But given it did the gap fill and the other stuff in my analysis, right here, on the daily time frame, anytime the RSI has went under 27, what happened here? Rallied. What about here? Rallied. What about here? Rallied. What about here? Rallied. What about here? A little bit lower, but rallied. But ultimately, higher, right? That's 6 years of confluence with high accuracy. Could it chop around? Yeah. But given the VIX, I think it's going to continue to rally. And then also, you've got to put some respect on Mr. Donald Trump. What did Mr. Donald Trump say today? See it? He's not saying maybe. I mean, he's using the word maybe, but what he's saying is it's going to cause a spike in oil. So just put some respect on it. With the VIX, I covered it, but just know, sending support, parabolic rise, parabolic rise. And then this was the last one. This was a massive supply zone. So rightfully so, today it had to hit it and then back off, but now it's tapped. So if it breaks, I think it could spike pretty aggressively. If it does, we got to be mindful. Watch your names. Don't be in anything less than 6-month options, preferably a year. Don't be in shit names. Don't be sitting in names where every time it sells off, you get gutted. Look at Meta. Since 2025 of February, anytime they're ready to sell it, they are not nice about it. When they're ready to sell Meta, they say, fuck you, retail. Got to be careful. Be mindful. Respect it. Where are we finding that support in SPY? Exactly where I mentioned, the gold line. That's awesome, compounder. That's so fucking awesome, bro. 300% is amazing. What dated contracts were those? Down this energy drink. I'm so hungry. Once I have enough, yes. I currently have a Discord. It's a little expensive, $75 a month. I don't broadcast it. If you guys want to join it and support it, that'd be amazing. I give a lot more personal stuff, which I'm giving a little bit too much right now because I just came back to X. But eventually I'm going to pull back on how much information I give X, and it'll mainly be Discord, and then I'll probably do a macro. The idea is I'll probably do macro market analysis with an X subscription once I have a large enough following and it allows me. But it'll be like $8 a month, something easy. Because at the very least, even if you don't want to follow my trades or uh, my actual TA, the skill I have is to bring you comfort and market direction. My strongest skill is macro pivots. I'm extremely good at macro pivots. I'm not going to be humble. I'm probably the best on X. I've looked for someone better. I have not found them. The only person that gives me a run for his money is Banana. As far as macro pivots, you guys can talk shit about his trading, do whatever. But he's very good at technical analysis. But in the last 5 years, he's been wrong twice, and I've been right against his two. Other ones, he's right with me. And then it's what's that guy's name? Tom Lee. But I think Wall Street manipulates it and makes what he's saying happen because eventually he's going to be scapegoated. There's going to be a super crash once, and they already did it. Actually, they already did it once. They did it with Michael Saylor and him in February of 2025. They literally fucking gutted them. They're talking about Bitcoin to 200,000, and then they crashed everything. Right, and then they did it in October to November of 2025 as well. So they've already fucked them twice. But overall, Tom Lee's pretty good. But I think Wall Street manipulates the market for him because they're going to use him because he was so right for so much and he had such a large following. And then you have literally every famous X Furu, with 300,000, 500,000, every single one of them was just regurgitating what he was saying. It's obnoxious, right? They'll like pay for his subscription and then they'll just repeat what he says. So I've learned to counter those trades. I follow a certain amount of very famous traders because I look at them collectively, and when they all start saying the same thing, I counter it because they're almost always wrong when it's all together. But yes, to answer your question, eventually when I do get approved, I will have a X subscription, but it'll be stupid cheap, and it's mainly for macro analysis so that you guys can have comfort in positioning. Like think of me as like a portfolio manager to where when I start talking bearish, you reduce your position size in the market. When I start getting bullish, you start increasing your position size in the market. That's ideally what I would like to produce with an X subscription. Comfort in the market for my followers. Ooh, I love this question. Yes, housing market. Okay. I love it. All right. I live in Tampa, Florida. Okay. Where do I start with this? Actually, we can't. 3 minutes. We got 3 minutes till the minutes. The minutes come out. Let's be patient a little bit. It's a little mini Head and Shoulders on SPY. All right, let me actually put some respect on this and get everything ready. All right, guys, I warned about a V shape out of this, didn't I? On VIX, in the yellow line, we tapped it. What's happening right now? That's an hourly candle too. And it's going to close right when the minutes come out. I warned of this, right? When I warned of this, where was SPY? At the resistance. See that? You can see it highlight both the VIX. The bottom of VIX, as soon as it tapped my demand zone that I drew for you guys in real time at the beginning of this stream, excuse me. As soon as it tapped it, top of the market. Supply and demand is king. And then liquidity sweeps. Always. Love it. So On the 1 minute time frame, we got a little mini Head and Shoulders, but I think this might be a bait. 1 minute Head and Shoulders, I swear to God, counter them. I'm gonna be impressed if this plays out. If this plays out, I'm gonna look like an idiot, or I'll be wrong for the first time in like 2 weeks. Sorry, but I usually try not to get too. I try not to voice too much on smaller time frames because it has far less accuracy. So on Patreon, my membership. So I have like 25 membership per price point. I think it was like 75, then 100, then 150. Just because at one point I was starting to blow up, but then I had to. Sorry guys, I had to work on my mental health, so I just completely went inactive and let Patreon even die too. Um, but essentially, a lot of people unsubscribed because I haven't been trading, um, and I wasn't posting a lot. Which there wasn't a lot to post because we're in a bear market, or we're in a bear cycle. So people have subscribed to the point where the 75% membership, $75 membership is open. But I mean, I think I've gotten like 10 subscribers in the last 2 weeks, so that's probably going to fill fairly quickly. What is. All right, the minutes are out. I'm just going to read on X what people are saying. So just give me a moment of silence, guys. I'm going to just read and just see what the summary of the minutes are. You can look at the price action. What in the world is that? Do I have the wrong? Wait, is that? Something is going on with. Ooh, that's why. I'm so sorry. Oh shit. I haven't read anything, but whoops. So my the purple line I was focusing on was meant to be the QQQ, and it actually hit it. I don't know if you guys see this. That was supposed to be my closed position, but I'll hold it just in case SPY gets swept. Anyways, sorry, I need to read this. Risk of high inflation expectations. Labor market staying stable, which I think Trump is fucking with the data. I'll talk about that after all this, actually. Majority saw advantages to shortening FOMC statement. Most participants preferred not to repeat the previous statement language that suggested an easing bias, which means like rate cutting. That's a bear statement. In such scenarios, almost all of those participants indicated some policy firming would likely be warranted, which means bearish actions. So be aware of that. If I mean, I only added like $100 to those lottos guys, but if we break that low, I'm going to double that. I'm not going to. I mean, I'm not a day trader, so I don't trade with a lot of money on my day trades, especially on a fucking lotto and an FMC. That's just wild talk. High inflation. All officials supported leaving rates unchanged in June. That was obvious. So if none of you guys follow Banana, I would follow Banana. He's a lot more nerdy than me. I'm way better at psychology. I won't say that. Sorry. I'm very good at market psychology and how money moves. But typically when it gets really in debt, like indebted or very analytical, I'll read his analysis. Like I'm not paying for a subscription right now, but I pay for like 5 people's subscriptions because to me, knowledge is wealth. And I have no problem paying for someone else's knowledge. It saves me time. I don't take anybody's fucking trades, but I spend like $500 a month on subscriptions just to pay for their knowledge, so I can learn what they put in the effort to do. Some participants welcome to review of communication tools and practices. That'd be cool. Fucking use something new, dumbasses. Gibberish. Fed staff forecast inflation in 2026 and 2027 will be higher than an April forecast, or was higher than the April forecast, reflecting the Middle East war and effects of AI build out. So their thought process is, by the way, we're rejecting the resistance again, guys. See that? Um, Essentially, they're getting more bearish on their outlook. Fed staff GDP growth outlook was a bit lower than April's forecast, bearish. You see how like at the beginning it was like all bullish and now it's starting to flip to bearish? And that's what I was forecasting at the beginning, right? A pop, and then as we get into the back end of the minutes, it starts getting a little bearish. Okay, I don't see any updates for that. So I could scroll through my timeline at some point, but around like February, March, I talked about the 10% correction. I called the top of that market, and then I called the absolute bottom. I literally forecasted 629 or 630. But I did that in my private Discord. I didn't do that publicly. But essentially, I said around that low, you would have to do a economy check, pulse check on the economy. And I have had a thesis for unemployment. Based on like the last 75 years of data, unemployment's always spiked to 6% once it has breached 4.5%. It did it in like early in the year. So based on 75 years of data and 100% accuracy, within the next 18 months of January, we should see a spike in unemployment that runs to 6%. And if that happens, we will have a market crash. But my main bias was it happening within 2 to 3 months of that 4.5% breach. But my analysis was if it didn't happen by month 3, Trump is manipulating the data and Wall Street would be forced to go long. And that's what happened in March and April. We hit that 630 level. We got the economic data on like April 6th, and it came in lesser than expected, which then confirmed my bias that I believe Trump was manipulating the unemployment data and that we would go to new highs. And that's literally what happened, play by play. Okay, I'm not seeing any new information on the minutes. So I would say that's about 60 to 70% bearish if I was to give a percentage. So we'll see what's happening here. They don't want to crash it immediately. You got to think psychology. If they start crashing it immediately, everyone's going to get puts because they think that the low of day is going to be breached because the information that they've been waiting on is bearish. So they have to waste a little bit of time, get people to realize that, think that there's going to be not a response out of the minutes, and then they'll pick a direction. I'd be very surprised if we stay literally where we're at. I give that like a 15% chance. I think a directional move happens. So what I'm doing right now is I'm just waiting. If you guys give me like names and stuff, I'll answer them eventually, but this is priority. Because there might be an intraday trade here and I'll say it publicly if I take it. The smart money move would be sweep that high and then sell or squeeze. Squeeze into the descending resistance again and then break. We'll see. Sorry, YouTube. I'm not used to checking your guys' questions. Give me a few minutes. Let this price action digest from the minutes, and I'll answer your questions too. All right. I'm gonna read Banana's update on the Fed minutes because I do value his opinion. He's a very smart guy. Yeah, he's essentially calling them fucking idiots, which I think we all came to that conclusion. And then one of the Fed speakers went from 0 rate hikes to 3 rate hikes by the end of the year. It's FUD, right? But you can't ignore it. But, you know, if somebody goes from 0 rate hikes to 3, once again, if they crash the market as soon as the minutes came out, everyone flips bearish. I'll talk about silver and gold when we find a move here. I'm just looking for an intraday trade, so I don't want to be distracted. I'm watching Twitter, and just in case we get some juicy information. Yeah. Watch it pop, and then Trump says something negative, and then Trump causes the market to top. If that happened, it's because he got a tweet. He got a little text from his buddies on Wall Street, because I think he's fucking compromised now, unfortunately, which I was a huge supporter of him. I do think he's compromised, unfortunately. Sweep the high. I know you want it. By the way, guys, let me go and draw this out for you. 1, 2, 3, 4, 5. 5-wave structure. 1, 2, 3, 4, 5. Now you got to put some respect on it. Could this be a wave 2 and then a huge move up? It could. But this can also be an ABC, which is my bias once again. So we'll see. So either we go higher here, or this is AB, or this is a 1, 2, sorry. And then we start crashing and burning. Trump says Iran may kill him. I don't know if Iran can get away with that. It's all about this hourly candle, in my opinion, going into 3 o'clock. We're almost at the halfway point. Why is that giving me different looks? Ignore. So many people use Robinhood now, which closes your intraday options at 3:45, and you can see that they're literally manipulating intraday price action against retail, because they'll wait till 3:45 for those to auto close, and then they'll literally fucking pick a direction and move it. And often it's literally the opposite direction it had been going the last hour, going into that 3:45. I hate Robinhood. It ruined trading for retail. They sell all of our information. All right, it's moving a little too slow. Let me look at the silver and gold for you. We should see a move near the 30-minute mark of the hour, in my opinion. So I said I believe that we're at a bottom for silver and gold. You can see the last time we hit this purple line for silver, it marked a major bottom in which we rallied. So, in my personal opinion, it's your line in the sand. It's the bullish trend, and when a bull trend is given up, it changes the trend. Could we break below it and it rally? Yes, but it more times than not ends in a lower high. There's a lot of supply here, so even if we rally, we could find resistance here. But you also got to realize that since this move was super parabolic, from November 2025, we're currently at a level where anyone that's bought after that is now underwater. So they're red, and they're not just a little bit red; they're very red, right? It skyrocketed up here and it just sold, and then it trapped all these people here that are like, "Oh, we're going to go higher. We're going to go higher, guys," for 3 months, and then it's like, "Nope, trapped." And then it rallied, and then it's like, "Oh wait, it might make a new high." Nope, just more liquidity in the supply zone, rejected, sold off. So, but this is ABC. This can be an ABC, A, B, and then ABC. And until this purple line has been broken, this is the trend for silver. So, is it supported? Yes. And you got to put some respect on it because it already hit it and it respected it once. Respected it so much that it rallied 12%. So, as long as this holds, there is a gap here, right? It could fill this gap, but if it fills this gap, my buy it could rally. But I don't think it'll make new highs. And if it fills that gap, I don't think it breaches 65. I think it's another liquidity sweep and it rallies up. It could rally up to here, which could be a nice trade, but I don't think it makes a new high. I think gold's right under it. You can see gold, purple line. Where did we find support? Purple line, purple line, purple line, purple line. We're at the purple line. Put some respect on it. Until we break below that, it can find support here. If it finds support here, the gold trade is the easiest trade. I don't think silver looks like that, actually. No, it's not. It doesn't. Gold is the easiest trade. Why? Why is gold the easiest trade? Because after the purple line, which one was the support? Blue. Watch this, guys. Pay attention. This is beautiful. Support higher, support higher, support higher, support higher. Did we break it? Yes. Resistance, resistance. Where's the target? The blue line. Inverse head and shoulders building up. Demand zone right here. So on gold, I'm bullish above it. I'm bullish above it for an assault on the 100-day moving average, which is the blue line. What could that look like? If it's very quickly, 14% or lower, if it takes days. But you got to realize 14% isn't a lot. There's better trades out there. Buy the MSTR dip. Buy the Tesla dip. Right? This is a very easy trade as long as this is supported. If you want to do it, go for it. I think if we see higher from here, I think it hits the blue line. But what's 14%? Wow, I just did 10% today. I'll scream from the rooftops at the bottom of the name. You can see some respect on that demand zone and the purple line. It's trying. Put some respect on it. Check out aluminum, NEO earlier. How about BYD? I don't know what BAF is, but BYD's in the same boat as the rest of the Chinese names. If you review my HSI chart, I'll do the HSI analysis because HSI says everything rallies in China. Okay. You can see all the way back to 2011. 2011, guys, 15 years of data. Anytime the weekly RSI breaches below 32 and we get a V-shaped reversal confirmation, which we've gotten, it's marked the bottom for major rallies every single time. Every time. 100% accuracy. In 15 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 times since 2008. Sorry, 18 years. 100% accuracy every single time. Okay. On top of that, on the chart, ascending support since the bear market low in January 2024. Anytime it's hit this support, it's rallied every single time. Where are we at? We're finding support there. What is already happening? It's happening, right? Another thing is the purple line, right? Resistance, support, support, resistance, 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 breaks above, look above and fell, resist or support, support. That's 3 major points of confluence, 4 major points of confluence on the weekly time frame. I think the bottom is in. There's also a demand zone that was printed last week. So could we dip a little bit? Yes. But ultimately, I think the names get bought. And out of all of these bottoms right here, I'm not going to do it again, but if you align Chinese names on these bottoms, they rallied, especially Baba, which is why Baba was my main Chinese name trade. So put some respect on it. Four minutes for the 30-minute candle to close on SPY and QQQ. At this point, they're just churning, wasting intraday options. You know, a lot of gamblers and degenerates took a position going into the minutes expecting a large move. Instead, it did the opposite. There's a head and shoulders going on, building out right here. Odds say it fell. It fails. Intraday head and shoulders and inverse head and shoulders never work on the indexes. You could literally counter this and go long. I bet you we breach the high. 75% chance says we breach this high. Given it's like what, $1? If you do this, make sure you do in the money and you cut it right here. Don't do out of the money because they could literally churn it sideways for the next hour and then you fucking your out of the money option goes to 0. But right now you see the purple line, it's breaking above it, and now it's starting to base on it. So odds are fell head and shoulders on the 5-minute on QQQ, and we breach this high. So my little SPY puts might go to 0, but realistically, if we break this high, I'm going to look at SPY to hit this one, and then I'll probably look at possibly adding a little bit to that, which was lunch money, guys. Give me a few moments for the chart analysis. I want to see if anything happens around this 30-minute mark. All right, guys, just really quick, 1,390 viewers. I appreciate you and love you so much. Thank you so much for the support. But I only have 29 likes on my live stream. If you guys could kindly just click on it and like it, I would really appreciate that. I would so appreciate it. You know, what is that? That's like a 1% conversion rate for appreciation. Just a little tap. Much love. Hmm. I gotta pay attention to SPY, actually. Is it the same look? Yeah, it is. Got a little intraday supply zone getting rejected. Already tapped though. And now we have this little demand zone. All right. Let's cover a little bit of the dollar. So I called this top of the dollar and this one previously, just because historically every single supply zone gets rejected initially. And this dates back all the way to 2006, right? I deleted these, but they were all valid because this was a supply zone over here and this was a supply zone over here. Supply zone over here. And now we're in this multi-week demand zone in which it's trying to find support and base. And as you can see, it's kind of based right around this blue monthly 100-day moving average, in which I think we spike at some point. We're going to get that correction that Tom Lee is talking about going into Q3. I think we rally up here for this monthly supply zone, and this marks a major bottom right here. So I'm going to go ahead and chart this in front of you guys in real time and set myself an alert because I know this is going to happen. My macro analysis is like 10 names. It's like VIX, US 1030, dollar, SPY, QQQ, Bitcoin, Tesla, Nvidia, um, IWM, and like two more things. I use all those names collectively, and then I create a thesis. I personally think I'm going to show you guys something I don't show a lot of people. Is I have a conspiracy theory chart in which these channels have marked major tops pretty much for the last 40 years. So my bias is around this will be a major top. I'm looking for a sweep, but then also we are not allowed to break below the June low. If we break below the June low, this middle of this trading channel is a major top and we're going to see a nasty correction. But my bias is we sweep these highs and we rally a couple percent. Like how much is that in a QQQ? It's about 9%. So that's a pretty nice move. If that happens, that should happen by August, September. I'll post the AVGO, and I already did AVGO, but I'll do it very quickly. And then I'll do PDD as well. I'm just prioritizing the intraday trade right now. But this is my bias. As long as we hold the June low, we look for a 9% rally in QQQ. All right. If we sweep the June low, I would be very concerned for a pretty nasty pullback in the entire market. I'll save that content for the next time I stream. Actually, let me hold that one. Let me hide that one from you guys.